This is our top down. This is the summary for the top down, right? So let's say you're trading a new pair, or every morning when you wake up, you want to do a top down. So the first thing that you do, this is number one. So number one, first you need to start with looking at order flow, right? What is order flow? Order flow is daily market structure. D1, market structure. Okay, what are you looking for? So first thing that you look for, you are looking for the last swing high or swing low. That's the first thing. Look for the last swing high or swing low on daily time frame. Example, we come here. This is our this is USD index. Last swing low or swing high. We have this swing low here. Okay, so if you see swing low, it means where we are bullish. But if you're not sure where you are, you go back 2 months back. Okay, even after you do your last, you mark the last swing low, swing high, go back to 2 months back and look at the market structure and see what was happening. Where was the market coming from? Like, just like I said in the beginning, you need to know where the market is coming from, where it is right now and where it's going. So let's go back 2 months back. 2 months back from here, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then lower high. And then there was a range here. Then now we're the BMS. This is the BMS. Yesterday, yeah, was the BMS, bullish BMS. So what does this mean? We are now bullish. That's why we have this swing low. Okay, after swing low comes swing high. So we are bullish on daily. Daily is now bullish. Yeah, it's from yesterday. This is now bullish. Bullish. Let's go to EU. EU, we have a last swing high. EU is opposite USD index. If you're not sure where you are, 2 months back again. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Fail to make a high, BMS. So we are also bearish on this one. This one. And the major swing low is this one. This is the lower low, which I think they are breaking today, as you can see. And this was the major lower high. So right now we are here. They are breaking this low. UJ, what's happening? We have the last swing low, this one. 2 months back, lower low, lower high, lower low, lower high, lower low, BMS, higher high, higher low, BMS. This one is bullish. This one does whatever it wants. This thing is different. I know some people would think that if USD is bearish, so this one will also be bearish. No, this one can do whatever it wants. There are sometimes it will just do whatever it wants to do. But anyway, it's bullish. So order flow here is bullish. USD index bullish. Now it's bullish. EU bearish. UJ bullish. Okay, let me choose another different pair that's different from this one, from USD pairs. Let me look for a different one. Maybe something completely different. Cut JPY. Yeah. Right. This is a mess. Anyway, it's okay. Last swing low, swing high. We have the last swing high here. Because of 1, 2, 3. Now let's look at 2 months back. What's been happening from these 2 months? There was this. I think you guys can just see that we have a range. This is the BMS, and right. So there was this BMS here. There was this higher. Wait. Is there a higher low here? I need to be sure. Do we have any higher low here? No. Yeah. So this was our higher high. This one. That's our higher high. I think our major low will be this one. That'll be like the major one. Yeah, this one. So this one, daily struct order flow is ranging, as you can see. There has been ranging the whole month. We are ranging. Okay, we have been ranging, and I think we are ranging in this range here, this low and this high. That's where we are ranging. Even though in premium we have bearish BMS here, yeah, but still we're ranging. So for this one, we're ranging. That's our order. That's now the order flow. That's how you know the order flow, right? If sometimes you don't know where you are, right, you can go to weekly to look at weekly if you don't know where you are. So as you can see here, weekly has been bearish. Lower low, lower high, BMS. These are our lower low. So right now, daily is now bullish, going to make a weekly lower high. Lower low, okay, no. Lower low, lower high, lower low. So now weekly is, daily is now bullish, so that we can go and make a weekly lower high. So weekly is still bearish. Until we break this high, then we can say we are now bullish. Anyway, you start from the daily. The only time you go to weekly is when you don't know where you are. If you look, let's say the back end, there's nothing that you see here, then you can go to weekly. Anyway, we're done with the order flow now. That's the order flow. Second part, number 2. Number 2. Now you zoom in and look at market structure to see where price is in alignment with order flow, meaning continuation or retracement. Now, what does this mean? We are now going to 4-hour and 1 hour. Is 4 hour and 1 hour, if order flow is bullish, are they also bullish? Or they are just short-term bearish to make a higher low or lower high? That's the second part. Number 1, daily. Number 2, 4 hour and 1 hour. Let's go back to our charts. Right. So order flow for USD index, bullish. 4 hour, also bullish, as you can see. Higher high, higher low. We are going up to make a higher high. This is the 4 hour higher low. One hour, I think you guys know, also bullish. We have a small structure here, a 1 hour structure. This one here, this is the low. So higher high, higher low, going up to make a higher high. So all these 3 time frames, they're all bullish. EU 4 hour, I think you know, is bearish. This is the previous lower high. This was the lower high. And then 1 hour, also just like you saw on, what is it, USD index, there's this low here, this low here, this low, sorry, this lower high, I mean, right. And then UJ 4 hour, bullish. I know it's bullish. Higher high, higher low, higher high, higher low, higher high, higher low, also bullish. This is the last swing high, swing low, last higher low, so also bullish. 1 hour, also bullish, also bullish. CAD JPY daily is in a range. So 4 hour, 4 hour. Let's see now. This looks messy, man. But anyway, let's try it and see. Deep premium, deep discount. This was the bullish BMS, and this was a higher high, higher low. Failed to make a high. BMS daily is bearish. 4 hour is bearish. We have this type 2 reversal here. Higher high, higher low, failed to make a high. And this is internal structure too. Internal structure. 4 hour internal structure, but this is our previous higher low. And this is our new higher high. So this is all internal structure. A 4 hour bearish internal structure inside this big range here. 1 hour. 1 hour also bearish. Same lower low, lower high. They failed to take this high to break above here. If there was a BMS here, then we would be bullish, but they failed to take this high. There was a stop hunt. This was a stop hunt. And I think you can see why. All these order blocks were used up. They were all used up, all of them. There was no fresh order block here. That's why they just went straight past it for this liquidity here. Yesterday's high. That's the second part. So now you're done with your with the number 2. Number 1, you saw the order flow. Number 2, you saw the 1 hour and 4 hour market structure. Number three, number three, we now look for areas of liquidity that can be potentially be taken out. Liquidity pools now. We're looking for liquidity pools. Swing high, swing lows, previous. Okay, no, this is too far, man. The only one we are looking for is these ones from weekly. Weekly highs, daily lows, Asian highs, Asian lows. So then number four also, you look for number four. Number four, look for order blocks that can be used for continuation. Okay, not just order blocks. You are also looking for breakout order blocks and mitigation blocks. So number one, daily check. Number two, market structure for 1 hour and 4 hour check. Then number 3 and 4, they are together. These are together. Number 3 and 4 are together. These ones, they are together. Looking for liquidity and order blocks, they are together. So now let's go back. Okay. 4 hour, where is the liquidity? There was this one here. They took, okay, no, overall, we have this buy side liquidity here. We have this long-term buy side liquidity, this one here. This high, and this high. That's the higher time frame liquidity. Recently, they broke market structure. We also have this sell side liquidity here. Sell side here, sell side here. And since this is our range, we also have this order block down here. This is a long term though, this is for long term. This is in deep discount. Also this fair value gap here, there's a gap here. But anyway, let's look at where we are now. We also have this order block here and this fair value gap. Liquidity, they took out liquid from yesterday. They took out sell side from yesterday. Yesterday's high, they took it out today. So now, since they took out sell side, we means now we are left with what? They took out buy side. You buy to that liquidity. So this was buy side. You are buying to that liquidity. So now we're left with sell side. This one, right here. And all of this internal structure here. That's the one we're left with. So now it means since they took it, do the stop hunt, I might expect a, so this is a combination of type 1 and type 2, where you have a stop hunt, then you have a shifting market structure. Stop hunt, shift, break, return. That's what we have here. So this was the stop hunt, a shift, a break. So we can expect a return to order block. Then price comes down. As long as they are done with this high here, as long as they are done here, we are going to have a return to order block. Then price comes down, target this low, and even these areas here. That's for this pair. Let's go to USD index. Index, we have this low here, this previous higher low here. That is equal. You can see the candles are almost equal. That's also sell side liquidity. Down here, we have this order block here, and this fair value gap. So usually for me, I don't mark the fair value gaps because I can see them. I don't mark them. They previously took out liquidity here. So the stop hunt. Stop hunt, shifting market structure, break market structure. This is a nice, and in the future, we can expect a return to order block here. Let's look at daily. Daily, what do we have? Daily is, my order block is this one. That's my daily order block. Right here. And this is also a break. It's good that I looked at the daily. I didn't see that. So we have this daily order block, and we have this daily breaker right here. Sorry, 4-hour breaker. So now you're looking at your areas of liquidity, order blocks, all those things. And this is our order block below the breaker. Right. So 4-hour, we also have this order block here. It's still fresh, return to order block. Then let's look at 1 hour. So 1 hour, we also have type 1 reversal, lower low, lower high, BMS, lower low, BMS. I need to change this so that I can be able to, too dark. I want to, Okay, much better, I think. Yeah. That's the 4 hour order block. Because I want to mark that breaker there on 1 hour. Yeah, they're much better. Right. So on 1 hour, this is a 4 hour order block. On 1 hour, there's a breaker here. There's a breaker. And there's a fair value gap here. So when this can be engineered liquidity here. So sometimes when they come back here, my low is still this one. This is still my low. My key low is this one. So as long as they are not breaking this low, I'm bullish. So this can be engineered liquidity. They can come back down here and then they go up. So that's what I'm looking at right now for this pair. But also sometimes they can use this. They can use this one and leave this gap here, and they'll come back for it later on. Right. For these guys, we have this mitigation block here on daily, and we have this order block on daily, 4 hour. This mitigation block also has a 4 hour order block. This daily mitigation block is a 4 hour order block here, this one. And there's a fair value gap here, this void here. And then up here, what do we have? This is a daily order block, right? We have this breaker here, 4 hour breaker. But I think it was mitigated. Yeah, it's used up here. They already came back to it. So this one is being used up. So now I'm looking at this fresh order block here. These are my key levels. And these are equal highs. Look at those equal highs. That's liquidity right there. Equal highs. So also this can be near liquidity. Sometimes they like to do this, where 4 hour will be like this, but 1 hour will be like this. Right. So when they come back to do the lower high for 4 hour, they are coming back also on 1 hour to take out all these highs here. That the engineered yesterday, then they drop, which is the same 4 hour drop. That's what we have here. And we have also this order block. So we have to see how they will react here. UJ, what do we have? UJ has been bullish. The past 1, 2, 3, 4, 5 days been bullish. They left a fair value gap here. They left a gap here. Then 1 hour, that gap has the order block. They didn't use this order block. They didn't use this one also. There was no return to this one too. So yeah, this happens. Like I told you last time, sometimes there are weeks where they don't even return to the order blocks. So recently we have this BMS here. And also this one. Yeah, this is happening right now. It's happening right now, this one. So if this kind of closes above, this is our order block. That's my order block. This is my sell side liquidity here. My sell side here. Just in case they don't want to break this low, they want to do a stop hunt, they'll do a stop hunt here into this order block. And then 1 hour, what do I have? 1 hour, they already mitigated this order block here. So now the only one I have is this fresh one here. So I'm looking for either on the lower time frame, either reaction here, or they'll come down here to take out Asian lows. They'll come back to take Asian lows into this breaker. Into that breaker there. This candle here was used to take out all this liquidity here. All of this order block here was used. Price came down to take out this low. That's a breaker there. So since these are my key low here, my higher low, and we're still bullish, as long as they're bullish, I would expect price to come down here and do a stop hunt into the breaker, then they go up. That's what I would be expecting. If we have a 4 hour BMS, it means daily is now coming to make a higher low. If we have a daily 4 hour BMS on the lower time frame, it means daily now is coming down to make a higher low, then go up. And this one, okay, I did this one already. Yeah. That's for our higher time frame. That's the higher time frame. We have marked our key levels now. We know the structure. the key levels, the liquidity, the order blocks, the breakers, everything. Now we know about that. This is the higher time frame. Wait, where is it? This one here. That's the higher time frame. That's for our high time frame. We now know the level, key levels. So now when price comes back to those to those key levels, now you can be buying on the lower time frame. So now let's go to the lower time frame is from here. This is lower time frame. Higher time frame in red, daily, H4, H1, liquidity, and order blocks. Higher time frame. Now lower time frame is from here. This one here. Now you're looking for a potential AMD or Judah swing, like in the morning when you wake up. For me, I trade when I wake up, it's London Open. So I'm looking for this in line with what I have marked, all of this. And then, so this and these are the same. Use the daily weekly opening to look for areas to buy or sell. And then, so this and these are the same, these two. It's like almost like AMD. Then use time. Your setups to be in line with time. Q zones, London Open and New York Open. If there's high impact news coming up, also same thing. Okay, you're looking for this. There is another, okay, yeah, it's for lower time frame. So meaning that if you are the lower low and you're expecting a lower high on this order block, and there's also news coming up, high impact, and then there was accumulation, the news can come and manipulate to the order block and then distribute. Or if there was already accumulation happened and there was already manipulation to the order block, news can come to distribute. But if there's no news, then it's just normal structure. This can be a lower time frame, AMD. So now let's go to the lower time frame and see. So for this one, tomorrow when I wake up, okay, I have to wait and see how price is going to close today. But from what I'm looking at here, these are equal lows here. This is engineered liquidity, and I still have my breaker here. So I'll be expecting price to come back down here. If as long as this doesn't hold, tomorrow I'm expecting, okay, I don't know yet because we are still on London close, right? We have to wait and see how the day will close. But if they come down here, I'll be expecting price to react on this breakup right here. Then they go up. It can be an AMD, or if they want to do type 2, AMMD. Also, we have this. There's a volume imbalance here. This is a volume imbalance. This has to be balanced by two sides. There was a bullish side, so now we need to have a bearish side to balance this. A volume imbalance has to be balanced on both sides. There was a bullish side, so now we need a bearish side. That's why I would expect something like this. But if this holds, yeah, they can also use this one. Things you cannot predict what the market will do. All you need to do is just mark your key levels, and then if they come to those levels and you get a lower time frame bullish or bearish BMS, then you buy or sell. Even this one, same thing. I have all this liquidity here. These equal highs here, this mitigation block, and this area here. So I can expect price to, depending on what the price wants to do, they can reverse here, but I will have to see what is it, a 15-minute or 5-minute bearish BMS here. Or if they take out this liquidity here, these are short-term liquidity, and there's a gap here. So then they can go up here, then they drop. If they decide to take out those highs, they'll be going there to this order block here. Always mark the order block above or below the liquidity. This one here. That's why I'll be expecting them to do a stop hunt and then they drop. For UJ, let's see. We marked all the higher time frame key areas, even this one. So for the lower time frame, I will be expecting this is also what is this? Okay, we have this liquidity. We have this short-term liquidity though. This one and this one. And this was a return to this breaker. So this breaker is used up. So now we're left with this order block here, down here. this one, and also this one here. I don't want to mark all of them because the chart is going to be a mess. But anyway, our first key level is this one, this order block here. This type one, sort of a type one reversal here. So this will be the first area I'm looking to buy. If they come down for this liquidity, then they'll be coming here, then they go up. Okay. Now, if this was the end of the day, then I'll be looking for an A tomorrow, M, then D. But then since the day is not over yet, we have to wait and see. They can come now, right now, they can just come back here and then they buy again. Since we are now going to we're going to New York lunch at the New York afternoon session. Yeah. So we still price can still move. For this guy here, this is my order block, right? They already took up buy side liquidity. They took it already. So this is my order block. So I'm waiting for, I can wait here for a return to order block here. This is my mitigation block. And I have hit an order block here. Right here. So this will be my key level. This is my short-term high, lower high here. So I'll be looking for price to come here to this area here, either this breaker here or this order block here, up here. These are the key levels. Then I sell, unless they want to take out this buy side. This buy side here, these equal highs here, this triple top here. Then as long as we're now bearish, they will do a stop and then they'll drop. Right, and that's that is all of them, right? I'm done with everything. So that's how you do a top down. So, and then this is the summary now. Higher time frame for direction and key level, then lower time frame for entries. The last one, this is a weekly AMD. If you want to do the weekly AMD, but sometimes, like I said last time, you won't see it. You won't see it every day, every week, the weekly AMD. But the market structure and everything that I told you, you still see it. So this is the weekly AMD. One short, one Q. What is one short, one Q? That's when you buy the weekly low of the week. That's one short, one Q. This, if you buy the weekly low of the week, then you just hold until the high of the week. So this is the top down. There's another student saying me this. This is how he did his top down. This is for high time frame, for daily, H4 and H1 only. It's not for lower time frame. So what he said, this is how he wrote his own top down. He said on a daily, we look for the last swing low or high. Are we bullish or bearish? That's the daily order flow. Then go to the H4. On H4, is the order flow the same, or is it in a retracement move? Just like I told you just before. That's what I was showing you. What do you expect next? Do you expect a higher high, a lower low, a higher low, or lower high? The key also is what was the last BMS on 4 hour, 1 hour? What was the last BMS? Are we in a range at the moment? Then look for areas of liquidity. Which one was taken out last? That's another key here. Which one was taken out last? If they took out buy side and we are bearish, then they're going for the sell side. Also on 4 hour, 1 hour, look for order blocks, mitigation, breakers, just like I explained in the previous photo. What are you expecting in the Q zones? Are you expecting a higher high, lower low, higher low, lower high? If you are trading dollar pairs, does the dollar market structure support your expectations? If you are trading something with the dollar, and then are there any news planned for this day when market might range until then? Yeah, that's what this is his top down. And then the lower time frame, you know about the lower time frame. That's his top down. So this is, you can use these two, either this and this. That's for a top down. So in the morning when you wake up, you can just go through this. You can print this and put it on your desk. So you can just look at it. Order flow, check. 4 hour, 1 hour, check. Liquidity pools, check. Order blocks, check. Then now you wait. So now you can anticipate maybe an AMD, a type 1 or type 2 AMD. And also your setup should be in the Q zones, London open. For me, it's the first 4 hours. From London opens at 8, right? 8 and 2:12. These are the 4 hours I'm looking for a setup. And also New York is from 3 p.m. to 7 p.m. My time. This is where I'm looking for a setup. These 2 times here. That's my Q zones. and the high volatility news is always in these times here, these in between here. That's where you're going to get all this. What is it? The high volatility, but sometimes you can also get it at New York afternoon session. For me, that would be like evening now, around 9-10 evening. I'm not trading at that time. That's how you do a top down. Let me do one more chart now. One more chart, a different chart. Let's look at the pound pair. Any pound pair, pound. No, not GU's in a GD. GU's is in a consolidation. It's just ranging right now, so there's no need to do this one. It's in a daily range, 4-hour range, 1-hour range. I need something different. Let's look for even this one. Yeah, even this one is okay. Something different. Let's see. Our daily, what's happening on the daily? Daily, any last swing low, swing high. We have a last swing low, a clear swing lower here. This one is more clear. And even though we have this one, there was a last this one here. 2 months back, bearish. Lower low, lower high, lower low, lower high, lower low. So our range is this one. We have a big range here. This and this. That's what we have. So what does this mean? Overall we are bearish, but now we are bullish. What is this? This is a short-term complex pullback. Yeah, it's a complex pullback. This is a complex pullback on the daily. 4-hour market structure is bullish. Higher high, higher low, higher high. We are inside here. This is where we are. Price is inside this range here. We're inside this range here. This is where we are in 4-hour. So we are ranging inside the 4-hour range. And on this order block, that's where they're ranging. We're ranging here. Okay, let's go to 1-hour market structure. We are also in a range again, same range. This high and this low, we are ranging. Okay, liquidity, we have all of this sell side. Today's low, this low, this low, and we have this order block here. I need to change this one. This is a 4-hour order block. 4-hour order block. But we have this 1-hour order block here, just below our liquidity. Yeah, they haven't touched it. Yep. Still fresh. Order block before these lows here. Up here, we have this one. This one is already been taken out. We have this one. And we have this. So we have these 2 areas here. Down here, we have 3 areas. We have 3. Market structure, lower low, lower high, lower low, lower high, lower low. BMS, higher high, higher low. So right now we are bullish. This higher low was on this breaker here. Today, there was a higher low in the break. Okay. And then now, so it means now we also reacted on this. This was also a fresh order block. So already it's mitigated. So higher high, I would expect a higher low here to go for that high. For the yesterday's high. It's also Asian highs also. That's what I'll be targeting. This is the order block. Yeah. This one has already been mitigated. So I'm expecting a higher low here. Then price continues to go high. Up here, what else do we have? We have this order block here, this fair value gap, also that order block there, fresh order block there. The only way I would invalidate this is if they break this low here. Then I think they'll be now coming here for all of this. But I don't think they'll come down here because they trapped traders here. They trapped traders. So today, if you had woken up in London Open, this would have been the BMS. When I woke up, I would have woken up somewhere here. I wake up around here. Yeah, I wake up around here. So I would have seen this BMS here, this 1-hour BMS, and then I'll be waiting for my price to come down to this breaker here. So I would have bought on this breaker today in the morning. Then I would be buying, targeting this high and this high. And as you can see what's happening here, there's a small breaker here. Yeah, so that's how I would do this top down here. That's how I would do this top down. That's the top down analysis. This is what you do in the morning. But once you get used to it, you won't even need to do this. I don't look at this anymore. But I do just in case I forget. So daily, check, 4 hour and 1 hour market structure check. Then also daily, 4 hour, 1 hour liquidity pools, all of this, and order blocks. Once you are done, then now you wait for this in the lower time frame. This is for lower time frame. Time of the day, AMD, type 1 or type 2, then you wait for all of this. You wait for this. Okay, 1 minute left. Okay, I'll give you a new link.